The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. Special announcement. We've got Rich Anderson on today, God willing, at the half hour, so we'll be able to talk to him about some of the action that's happening in the grains and a whole bunch of other stuff. The first chart that we're going to look at here this morning is the German DAX. These are not acting nearly as well as we would like to see them. You see, there was a gap down this morning, and if we don't hold that level there, we could be looking at new lows, and new lows at this time on a Friday would not be a very, very positive thing, in my opinion. Let's take a quick look here at the German DAX. Let's try that again, Larry. The FTSE, you'll see the FTSE is acting much better. We did come down and make a butterfly bottom down there on the 7th. We've had the nice rally. Now we're having a little bit of a pullback, so if it's any good, we should start moving higher. But the British pound is not really paying a lot of attention to this. Here's what we're looking at here over the past few hours, going back to the 12th when we made our bottom down there at 24.80. This I posted early this morning because of the fact that there was a potential that we would hit that 125.60 for good support. That was a 61% retracement. And then, of course, the secondary number was a 78.6 number, 125.10, and we went through the 125.60. We stopped there for maybe a half an hour. Well, no, about an hour, I think, because it was one bar, one or two bars, and then we've gone lower. We're down near the 78% level. Now, that's the last area to look at. I was suggesting that that might be the best place to look at it, mainly because of the fact that you had 127 expansion on the upside. You might get 78% on the downside, and that's why we're looking at that. The problem is you don't really have a good ABCD structure there to add anything more to it. You're just looking at retracement numbers. If we go below 124.65, that would not be a good number, considering that we're right there. We're at stop is well, that's a good place to buy it, 125.50, and you stop right below the 78%. That's 40 pips, $250. That's certainly acceptable. That's you want to buy it on retracement. That's what I would be doing. Now, this next section is for you, Ruby. So we need to pay a little tiny bit of attention here for Ruby here, because she asked us a question yesterday about that famous trading thing called natural gas. And I have it all set up, ready to go. And wouldn't you know, somebody hid the doggone thing here on me. Shut the front door and raise the rent. Boy, this is really frustrating. Here we go. Nope, that's not it either. Boy, I thought I had it. Oh, this is really frustrating. Shut the front door. It's got to be here. I had a whole section ready for you, Ruby, to talk about natural gas, and it's not here. Here's the part that I wanted to talk about. Here's the second part of it, but I don't see the first. Let's just do the second part. I'm going to have to do it the wrong way, I guess. Maybe I'll find the other one here. But here's what I'm looking at. Yesterday, when you were down there at the $4.05 per cubic foot area, that was a big ABCD on the daily. We had a really strong rally, folks. $2,300 up to $430. And 430 was the 61% retracement of that intermediate high that we had on December 5th. And you can see what happened. We had a big break, a rally back to the fib point, and then closing in the lower end. And we gapped down last night, and we've continued down ever since. The reason why I'm bringing that to your attention, even though those patterns look so darn beautiful, they can fail right away. I mean, we've seen this time and time again that this can happen, and you certainly don't want to stand in the way of it when when they fail like that, because that is not a good. That's certainly not a good feeling to have happen. So watch that. The other thing that's important is to don't stare at the monitor. If you're trading the E-mini and you put a trade on, go look at something else, because believe it or not, folks, these folks that are trading the market, like Mr. Z and Doodad and all the other folks in the Dan and every place else, they don't really care what your position is. They care what their position is. So you don't really need to stare at it, because it's not going to do you any good. There's no question about that. So try to learn to wean yourself away from looking at the trade that you're on. Now, you can look at the machine. I don't think there's anything wrong with that. But if you're in the euro, go look at something that is not related to the euro, like gold or crude oil, or let's say, the silver or something like that. You could do anything. Any of the grains, any of the meats. Just look at something different than what you're looking at, because it's not going to help you by watching it. All it does is, especially now with all this electronic stuff that we have, it tells you to the second exactly what your equity is, positive or negative, and that's what causes the problems that you run into when you're doing these things, because you seem to think that watching the machine you'll help the things move higher. I know hope is one of the things that you look for, but hope is not a good trading word, folks. It really isn't. It's not very good at all. Now, yesterday we had a question about that dollar index and the banking index, and I wanted to spend a little bit of time on that, because it's getting worse and worse every day, folks. You can see the dollar index is the red one. That means it's inverted. That means the dollar index is going higher as the banking index is going lower, and the dollar is certainly going higher today. We're getting up near that 98 level, which is the level that we were watching very, very closely. If you remember, we talked quite a bit, about the euro yesterday. In fact, the main thing that we were focusing on was the fact that this long-term, chart in the euro is extremely negative, and that leads to, markets, heading down. And if we look at the euro and what it's done over the past few hours, let's say the last 6 or 7 trading hours, you'll be able to see that it's been following quite nicely. This one's that I post in the middle of the night here. That's a butterfly. Good for you. You get a gold star there, Mr. Marshall. So anyway, happy holidays to you and Lynn, by the way, and Sarah sends her best along the way too. But unfortunately, our friend Kelly is he's really getting weak. It's not much longer. I don't think he can last more than a few days at 95, but God, what a wonderful life he's led, and what a great friend he's been. Let's take a look here. This is the euro over the past 10 days. You'll see we had those ABCD patterns up there at that 114.40 level. We had a nice ABCD pattern coming in. At the 113, we rallied 80 pips right up to the 61% retracement yesterday, and here we are coming down today. We're almost at the target, I believe. Right now, I just heard it beep the first time at 112.70 is where I had it set. So that's the ABCD structure on that. So if it has any help at all, it could get a little bounce from here, but frankly, some of these markets are looking weaker and weaker. When we come back from the break, I would like to spend just a tad more time with the banking index, because that's the money. Those are the money boys, and when the money boys are not taking money in, that's not good. They don't like that, and so this is not a good sign for the market, folks. We've been saying that for some time. 877-927-6648.
The TAS Profile Scanner is the most revolutionary piece of trading software that you will ever try. Wouldn't you like to approach the markets with confidence? As you begin your trading day, it's likely that you'll be faced with lots of decisions. In order to make the best decision, the first thing you'll need is a strategy that will help you minimize your risks. Whether we're in a bull or bear market, a good strategy is to have the tools needed to help you scan and analyze the markets before you trade. The TAS Profile Scanner instantly scans and filters over 2,500 global financial markets, such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, president of TAS Market Profile, the TAS Profile Scanner understands that in today's technological world, the use of top-flight software applications, automated trading algorithms, and technical analysis expertise is essential to successful trading in today's market. Whether you're looking at the trade matrix, the ETF heat grid, the market breadth, the landscape charts, or the many other features of the TAS Profile Scanner, this is a piece of software that will revolutionize how you look at the markets and set up your trades. The team at TAS has even put together a 12-part video series to walk you through every aspect of the TAS Profile Scanner, which you can find directly on the TAS order page at TFNN.com. Sign up now for only $97 a month with a risk-free 30-day trial, so you have nothing to lose and everything to gain. See for yourself how you can harness the full power of the TAS Profile Scanner by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services section. Remember, with a 30-day money-back guarantee, you have nothing to lose. Don't let another day pass you by without trying out this amazing piece of software that will revolutionize how you look at the market and how you place trades. Sign up today.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, we're back, folks. We're going to take a look at this banking index. If you'll notice here, during the time between April and September, we hit an exact 61% retracement 3 different times. The first time was in May, the second time was in August, and the third time was the end of August when we had that solar eclipse. And then, of course, it started down and started making lower highs and lower lows. And you can see here that we were looking for the market to expand at least to, we had a nice target completion down there at the 78% level, and it rallied quite a bit. It rallied 10% and over a period of about 6 weeks. And then you can see the big gap down that we had on December the 5th, and that was the real thing that started the something happened to those banks on that weekend, because they just got some news that they didn't like, and they just literally ripped it out. And you can see we've gone below the 1.27 expansion here, folks. That's what's so bearish about this. Just take a look at this. Now, I've blown it up a little bit so you can see where we are, because we're at major support here this morning, down about another buck. At that level of about 88, just a tad below 88 would be the 1.618 expansion. The problem is you've got another ABCD structure coming in down at 85, and you can see the steepness of this move from the C leg at 103.50. I mean, it's been, it's just not taking any prisoners. We're 103. We're trading at 89, and we haven't even had an up day during that time. So this is a very, very bearish chart pattern in an area that you don't want to be bearish, because that's how they keep scores with money. And when these banks are in trouble, that means that there's usually something not right, and you want to pay just a tiny bit of attention with that. We've been following we always look at Goldman Sachs. It looks absolutely horrible. And we've been watching Deutsche Bank for a very long time. And since we're talking about that, we'll bring it up here, and you'll see the same thing happening here. We went down and we made that 1.618 expansion at 8.56. The low was 8.26. We're trading it yesterday. We were trading at 887. So that's if it goes below that number now, you could be looking at anything. And since they're talking about a merger already believe me, when the mergers come in, the people that want to merge with them want to buy this stock as cheaply as possible. As you remember, Bear Stearns went off at, I believe, $3 or $4 a share. It had been like 120 at one time, and I had a good friend that was in that who actually worked for them. Anyway, now let's go back and look at Deutsche Bank here, because there's something I think is relatively important. If you'll look at that red box that's there on the left that I posted, you'll notice there's 1, 2, 3, 4 ratios between 0.42, 50%, roughly between 38 and 50%. 4 ratios that hit during that time as it was going lower. And this is not a very good sign. The tip-off here is when Deutsche Bank offered a 35% discount to buy the stock. Now, you don't have to be a rocket scientist to be scared of that one. Anytime something looks too good to be true, you can almost as surely guess that it is. It'd be like someone offering you a Deutsche Bank isn't gold, but it would be like someone offering you 35% off of a American Eagle $20 gold piece. They're going to give it to you at 35% off. That just doesn't happen. So be careful when those things come up. And if we're here in the den, we're certainly going to be looking at that. So anyway, the bonds have had a pretty good reaction to the downside. As you recall, there was a really nice pattern up there at that 143.20 level. We posted that. Whether you folks took advantage of that, we were looking at that triple top that was in the Bund from Germany, and that certainly turned out to be correct. And also we were looking at the short of the TLT, and that certainly is working too. But these are small moves right now. They haven't really done very much, but we're going to see more volatility as we go through here, folks. This is the season for volatility, Santa Claus and the elves and all the others, but there will be more volatility coming here for sure. I don't think there's any question about that. We're seeing more and more of it, and it's going to get even more intense, I believe, after the first of the year. If these banking stocks don't hold down in this area here between, 88 and 85, boy, we're looking at some real serious stuff. The FANG stocks have held up relatively well, which is a good thing. And the NASDAQ is holding up relatively well. The S&P, backed off to a 61% retracement last night down there at that 2620 level. That was a, pretty important move to look at. We've got some swings here in the currencies today that are, very important. The euro and also the British pound, also the Japanese yen, and also that dollar index. If you remember, that dollar index is getting up there now near that 98 level, and that's where we could be looking at that possible, triple top up there that Marshall brought to our attention yesterday, a 3 drives to a top pattern. Let's put up here, Ruby's asking me, what is the worst scenario for today? For me, Ruby, it would be not to make it to the end of the day. That's what I look at. Every day above ground is a good day. I stay away from open graves as often as possible. So I don't know if there's any worst case scenario. If you're in a trade and it's not working, let the market take you out. Thank you, David. David just posted that dollar index, just made in new highs now at 97.70. Remember, we got a lot of stuff there at 98, and we got a lot of stuff here at the euro at 112.60. So this might be a spot where they're going to hold, and the pound is within 8 or 10 pips of the 78% level. So it's not a time to throw in the towel. So we'll see if it's going now. Bitcoin. Thank you very much. Thank you very much, David. Let's take a quick look at BIT because I wanted to show it in a different way. Well, there's 2 ways I wanted to show it, but we're down near those old lows now at 32.50. The ABCD pattern going back to 2010 came in at 3,800, and it is going below that. So that's not unusual, and we're not trading this. All we're doing is watching it. So I wouldn't get too excited about it, but I think we're getting to an area where we'll probably be able to look at it. I'm watching that stock. I think it's oversold or something like that. That OSTX that someone posted, it tracks Bitcoin pretty much spot on, and it's getting very near a major ABCDs. As a matter of fact, I can bring this up here and show it to you. You won't be able to see the symbol for the stock. Let me get it up here. Overstock. Thank you, David. Thank you. Just bought platinum. Stop. Where is platinum trading at? Platinum. If that platinum is under 775, I wouldn't touch it. I wouldn't touch that platinum if it's under 775. Can someone tell me where platinum is? I can't pull the charts up while I'm talking here today because there's the ABCD here on this OSTX. That's that overstock, and it tracks Bitcoin tick for tick. I mean, it really does. Okay, 783. So it's okay. Yeah, 783. The platinum is still holding up, and the good part about the gold is you're now down, $20. So you're in that zone between $17 and $20, which is 1/2 of the harmonic number. So this is the spot that we were talking about in gold, to get the first correction, and here we are. So let's wait and see.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary Power Law Vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and I believe we have Rich Anderson from Anderson Capital Management on. Rich, are you there?
You bet. Hi, Larry. Merry Christmas.
Hey, Merry Christmas to you and your family, buddy. Hey, listen, I posted that link that you gave me yesterday about this Chinese business that's going on and the rumors going to unknowns and all the other factors. I mean, they do the same thing in the grain markets that they do in the political markets. They speculate on where everything's going. Is that right?
Oh, there's no question. But the key thing that you follow, and indeed there's the talk this morning of them buying 2 to 3 million tons of corn, which would be just a start. And buying more beans. The key, it doesn't get there unless it gets moved. So the thing you look at is the rail. And PNW, the Pacific Northwestern, the basis was improved 17, 18 cents on soybeans. You know, that kind of, it's like, you know, they got to show their card by buying the freight, right? And then the next freight after you get it to the West Coast, of course, is the Baltic Dry Freight Index. So, you know, you watch freight rates and that in the basis, and that tells you what's moving and what's being done by the commercials.
Well, Cy seems to think they're making some progress with the tariffs, he said, because you're starting to see some business, he says, which you haven't been seeing recently. So I guess that's a good sign, isn't it?
Oh, absolutely. And they're taking the tariff as of January 1st. They'll take the tariff off of cars. They had slapped it from the 15%, which is their normal. They had pushed it up to 40, and on January 1, it's back to 15. You know, their PMI, their economic numbers came out this morning, Larry, and they were down. And, you know, even what's reported is probably optimistic.
Wow.
And China is all about, you know, saving face, and so they have to negotiate and make things work out for them politically as well as economically. But you know, when your economics shows that you're coming down, that makes their leaders nervous, because you know they don't just get voted out of office. You know, it's a whole different deal.
Yeah, it certainly is. That's for sure. And they never talk about these ghost cities that are there. And I've actually been to one of those ghost cities, and my gosh, it looks like Manhattan that was hit by cholera or something. Rich, we got a question about the supply-demand situation in wheat. Any feeling on that?
Well, I mean, you have to look at the world. You know, production was down 17.5% last year. You know, 85 million metric tons the year before, 70 million metric tons this year. That's material. The Australian crop is down 67 million metric tons. Nevertheless, Russia had been selling like crazy, but in the next 6 months, they may very well cut back their exports. And, you know, I think it's going to, I'm optimistic that, you know, the world economic machine is going to start to, you know, run a little better, particularly between China and the U.S. And the Lindsay article that from a couple days ago explained how when the Huawei person, Meng or whatever her name was arrested in Canada, how the Chinese knew about it at the time. And she had made some things about, back when she was in China, about how the company has to sometimes do things that are not within the law of the country. Well, that's not making Xi and those guys happy. Yeah. So they don't mind a little slap on the wrist on her, you know. But it all has to be face saving. So then they picked up a couple of Canadian guys. But the bottom line is they want to get trade going. They played their trump card, figuring that Trump would have a disaster at the election, and he didn't. And now they got to get back to business because their economy's coming down. There's a lot of issues in the world. Macron in France and the problems he's had, had to roll back the fuel tax. Merkel,
Rich, we got a caller from Boston.
Not realistic on their balance, on their budget. May in England, do they Brexit? Don't they? Is it a hard Brexit? And how you're going to get a bunch of people to agree? That's very difficult. The Fed raises next week, I believe. But then after that, if they don't raise, that's probably negative. And if they do raise, that's probably negative to our equities, because if they don't raise, that means our economy's not doing very well. Yeah, that's my macro outlook, which I try and start with, and then I go down, and it's all about timing, because as you know, you can be fundamentally right, but your timing can be wrong and you lose money. But you can be fundamentally wrong, but if your timing's right, you make money, and that's what you taught me over these years.
Well, we've got a caller from Boston. Dave, are you there?
Yes. Good morning, Larry. Good morning, Rich.
Good morning.
I think it's probably a great gathering to ask this question. The Farm Bill has a provision for the cannabis sector and the growing of hemp on a first allowed time in quite some time, from like the 30s or 40s. I was looking to see if either one of you had a take on what this might have as far as the agricultural sector goes, and if it would have a relative impact on the cannabis sector.
Well, we've proven in this country that we can produce like crazy. You just tell us what we can make money with, and we'll do it. In fact, in my farm in South Dakota, I'm talking with my guys that actually do the farming for me about this will be a crop for the future. It was a very common crop in the 30s, and then it became illegal.
Really? It was a common crop in the 30s?
Than they can use, trust me. And it'll take away some of the corn and possibly some of the wheat acreage eventually. But keep in mind that with taxes, in Colorado, they're not getting the taxes they thought they would, because it's cheaper to buy from your dealer than to buy it legally.
Oh, wow. I didn't know it was a crop from back in the 30s, Rich. That's news to me.
Well, it's maize, yeah. And
wow.
How will it affect cotton, as an example? We're still trying to figure all that stuff out. And when I have some insight, I will let you know and come back and share it with everyone. But we're looking at it major league, not for this year, but planning out 3 to 5 years from now. We think this could be an important crop for part of the grain belt.
Well, I know for a fact that's one of the products that Rich doesn't use. I've been a friend of his for almost 50 years, and neither one of us have ever touched the stuff, so I don't know what it'll do, but we'll see. Hey, Dave, I hope that helps. Any other question you might have?
Yeah, there was a good answer on both of it. I'm just a curious bystander on it. It seems like the medicinal values to it are legit. I just don't know about the business aspect to it, so just thought I'd throw it out there and get your take on it. Thank you, Rich. Thank you, Larry.
Thank you very much, and happy holidays to you, Dave. Hey, Rich, I want to thank you for being on today, buddy, and I'll have you on again probably right after the holidays. Wish you and Lisa and the kids the best, my friend. So have fun. Tell your brother I said hello, too.
All right. Take care.
All right. Thank you. Rich Anderson of Anderson Capital Management. Always a great guest to have here at TFNN. And we're going to pay a few bills, and we'll be right back.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. for. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics, including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, brought to you by Nadex. Next on TFNN.
Okay, we're back, folks, and I posted a chart of the banking index just because I wanted to see where it opened. And the reason why I posted it here is it opened exactly at the number we were talking about. That was 88.11. That was the 1.618 expansion. It's rallied $1.30 here in just a matter of a few seconds. So, well, 2 minutes. So it's interesting that it did that and held. So I watched that because I really believe in these numbers, especially when we're looking at Fibonacci numbers and especially 1.618s. I also found during the time of our break here the chart that I was looking for when I was talking to Ruby this morning, in the fact that we had that beautiful ABCD form yesterday and the market rallied a quick $3,000. That was early in the morning. You can see it closed near the end of the range and then it went lower. And what I was trying to bring to her attention is the next chart, because this is why it's so important, is because after we had that beautiful bottom down there at that 104.50, you'll see that it rallied exactly up to the 382 retracement of that previous swing, and you can see what's happened. You know, we're down well over, we're down $3,500 from that high we made yesterday morning when it looked so great, but it hit that 38% level and couldn't go any higher, and that would have been the first first situation you want to worry about. And then after the rally that we had at 423 failed, boy, that you don't want to stand in front of that one. That's a real nasty one. So the stocks are holding up relatively well. I believe that dollar index is going to be the key to it. So pay a little bit of attention to it. We did hit our objective of the euro. We did get down below the 112.70. We hit 112.68. So that's pretty much has completed that pattern. And if it goes below that, then you're looking at some more trouble to the downside. But that's how it looks early this morning here. But we'll have to wait and see how it ends. Remember, this is a Friday, and it's going to be a down week. It looks like. No. It'll be an up week because I believe we were almost in the sewer. Yeah, I believe we were in the sewer. Let's double check that just to be safe here because, yep, this will be an up week because if you remember, Monday we were way down. We made new lows there right below 2,600 and then took off. So that means it's going to be about an unchanged week because we closed last weekend at about right where we are now, 2632. So that's actually a good thing for holding everything together. So whether that'll be continuing on, we'll have to do day by day and see what happens. Of course, it'll be a weekend, and there's always crazy things happening in the world, especially now with all the things that are happening. For heaven's sakes, it's a lot. it's a little more. That's one of the things when you go to a foreign country like Hong Kong or Denmark or someplace like that, you don't get all the news that you get here. You get bits and pieces of it, but you don't get all the stuff. Someone asked a question a little while, what is Hong Kong like during the holidays? Folks, it is Hong Kong at night, and I've been to all the major cities in the world. Hong Kong at night, hands down, is the most beautiful city in the world at night. It's pretty during the day, but at night, it is absolutely spectacular. If you go up there on the top of the peak up there, it's just Victoria Peak. It's just unbelievable. You can see China and Macau and all the beautiful lights. And the Christmas decorations are spectacular. Go online and look at some of them because these big 70, 80, and 100-story buildings, they make them in the shapes of mangers and also Christmas trees, Hanukkah. I mean, you just can't believe the beautiful, and they're flashing and they're lighting up, and they go till about 2 in the morning when they turn them off, and then they bring them up again as soon as the sun goes down. About 5:30 that all starts. But it's really spectacular, and all the streets are decorated, and the people are in a very festive mood. There are a lot of Christians in Hong Kong, many Christians, and there are a lot of Buddhists and other sects also, a lot of Muslims too. But everybody follows the holiday tradition really great. And you can get on the MTR there, the little underground subway, go all over the city for about $4, and you can get on a bus for 88 cents or 89 cents when you're a senior like I am, and go almost everywhere. So it doesn't really cost very much unless you try to buy a house. If you try to buy a house, you're in big trouble because it runs about 20 grand a square foot, and that's a little bit too much. But the hotels aren't bad. You can get a really nice hotel. Just go to Google it, Marshall. You're great with Googling. Just go look at Christmas in Hong Kong. You're going to see some. You know what I'll do? When the boss gets back, I will have her get some pictures of Hong Kong at Christmas, and we'll show some of those on Monday's show to let the folks see what it's looked like. But it's a beautiful place to visit, and it doesn't cost a great deal. It really isn't. Your fare from California is around $800 each way, and from the East Coast, it's probably, since you're going the other way, it's probably about the same, $800 to $1,000. And it really makes it a beautiful trip. So, and that's round trips, and it's nice. It's a beautiful place. But I'll tell you what, folks, I travel a lot, and nothing is any better than when you walk into the United States of America and you see that sign that says, "You are entering the United States of America." And that always makes me feel good. It's always a highlight of my trip, and I enjoy it very, very much. In fact, in some foreign countries, you're walking into you're walking into the U.S. on foreign soil, which is actually a pretty cool thing to have happen. So we'll see. Cage people living there. There's some poor people there too, Ruby. You're not, and believe me, a house here in the States, it would hold probably 5 or 6 Chinese families, because usually they have 1 child per family. But you can imagine 3 and 4 families living together in a really small building. They don't expect a whole lot like we do here. Like everybody has their own bathroom. Forget about it, But it's pretty nice. So we'll see what we're like. Now we're down 20. What are we down? About $23. See, 57. No, we're at 28. 57. We're down $30 from the low. 28, 30. Yeah, we're down $30 off the top in gold. $34 is the harmonic number, so we could be. That would be a victory. That would be a flat-out victory, Dudette, if gold closed up on the day, and it could possibly do that because we're right at, right near that Fibonacci number that we were looking at. Around, I think it hit it. It's 1237. And that's pretty much spot on to what we will be watching here. So that's down $30. So pay attention to that. And if it closes badly, then you're going to be looking at something a little more sinister, would be my feeling. So we'll see. It hasn't rallied very much. It's only rallied $2 off the bottom, but that's $2 where it wasn't before. So pay attention. As far as the S&P, I have to maintain my bearish bias here. And once we went below 2630 last night, I really thought it had a chance to hold that level. We went down to 2618. We rallied up to 26.35 early this morning. We will have to pay close attention to that 26.36 level, folks, because that was the 382 of the intermediate high we made yesterday up at 26.72. So pay a tad of attention to that. So keep an eye on the currencies. We got the euro bottoming, we got the pound bottoming, we got the yen topping, we got the dollar index possibly topping. So this could be a real rock and roll day. And next week we're going to have, I believe, on the we're going to have Norman on. What day will he be on here? The 20th, I believe he's going to be on. Oh, that's a day when we have hardly any aspects, so that'll be pretty interesting. And we have the 21st. We've got the winter solstice. The shortest day of the year is coming up a week from today. So live every day in an attitude of gratitude. I mean, God bless, and I'll be back in a few minutes to wind it up.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, someone asked me to post the most important chart over the weekend, and I'm going to have to bring it up to the U.S. dollar index coming into the far stretch of 1 furlong to go. We're looking at 97.92 as a 3 drive to a top pattern, double 1.27, 1.618, expansions up there around 98. If we close above 98, it'll be at the gate. If we don't, it's getting ready to possibly roll over here. So pay close attention to that. This is related to that U.S. dollar index versus the euro, and that would bring us in at 112. 40. Get below 112.40, we'd be looking at some pretty low levels in the euro, high levels in the U.S. dollar. And as the U.S. dollar rallies, you know, that dollar index has been going the opposite way. But the dollar index hit major support there this morning, folks. It opened at the exact 1.618 expansion that we talked about before the show. Hit it exactly, 28, I believe. I can see it right there. You'll be able to see it right on the old money here. The ABCD is a lot lower, but it was right at the old 1.618 expansion there at 88.18. So that's where the beeper went off. It hit it one time, and that's why I put that chart up, that 15-minute chart, to let you look at it. So I kind of keep that as a guideline, because when the money starts getting out of these banks, there's trouble, because these banks are there to make money. And we got interest rates are, you know, they're going lower right now, but they're getting ready to turn higher again. So keep an eye on those bonds. You get a nice ABCD in the bonds, you got a little bit of a chance in here. So that's it. Right now, the market looks pretty solid. You know, it doesn't really have any problems. But if we get below that 26.20 level, that's not going to look good for stocks for the rest of the day and then coming into the weekend. And you notice that the DAX and the FTSE certainly didn't look very good today either. And when we all go to the same cash register each time, so take a look at it. One other thing, folks, it's Christmas time, so make sure you try to help the folks. 877-927-6648. Every day in an attitude of gratitude, and may God bless.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.